95% of traders find trading impossible. They blow accounts, they quit, they call it rigged. They say the market is against them. They swear algorithms hunt their stops. They blame everything except the one thing actually destroying them. Meanwhile, 5% find it obvious, almost boring, systematic, predictable even. Same markets, same charts, same opportunities, same 24 hours in a day. So what's the difference? It's not intelligence. Some of the smartest people I know have blown multiple accounts, PhDs in mathematics, engineers, doctors, brilliant minds destroyed by the markets. It's not capital. You can start with $100 or 100,000. The failure rate stays the same. It's not access to information. We all have the same charts, the same news, the same data feeds. The difference is this. The 95% are fighting a war. The 5% are playing a game they've already won. Today, I'm going to show you exactly why trading feels impossible, why you're making it harder than it needs to be, and how the top 5% made it so obvious they're almost bored. By the end of this, you'll understand why you've been struggling. More importantly, you'll know the exact shifts that separate those who survive from those who thrive. Let's start with a story about two traders. David was a software engineer. Brilliant guy. Could code complex algorithms in his sleep. When he discovered trading, he approached it like every other problem he'd solved, with more analysis, more data, more optimization. He had 47 indicators on his charts, not exaggerating. 47. Moving averages, RSI, MACD, Fibonacci, Bollinger Bands, volume profiles, market depth, order flow, correlation matrices. His screen looked like a Christmas tree designed by someone having a breakdown. Every morning, David would spend 3 hours analyzing. He'd check economic calendars, read analyst reports, study institutional positioning, scan social media sentiment. He was drowning in information, convinced that more data would give him the edge. After 18 months, David had blown through 4 accounts totaling $65,000. Not because he didn't understand the markets, because he made trading impossibly complicated. Now meet Sarah. Sarah was a former casino dealer. No college degree, no financial background, just 10 years of watching people gamble and understanding one simple truth. The house wins because it has an edge, and it executes that edge consistently without emotion. Sarah's trading system had 3 rules. Just 3. Rule 1. Only trade during specific hours when her edge appears. Rule 2. Risk exactly 1% per trade, no exceptions. Rule 3. Exit when price hits her predetermined level, whether it's a win or a loss. That's it. No analysis paralysis, no indicator soup, no economic reports. Just 3 rules, executed with the discipline of a machine. After 18 months, Sarah's account was up 42%, not because she was smarter than David, because she made trading stupidly simple. This is the pattern. The 95% make it complicated, the 5% make it obvious. But why? Why do most traders instinctively choose complexity over simplicity? Why does trading feel so impossibly hard? Here's the brutal truth. Trading is hard because it violates everything you've learned about success in life. In school, more studying equals better grades. In most careers, more hours equals more output. In trading, more analysis often equals worse results. More trades equals smaller accounts. More information equals more confusion. This breaks your brain because it contradicts your entire operating system. Let me show you the 5 reasons trading feels impossible and why you're probably making every single one of these mistakes right now. First, the uncertainty paradox. Every other job has structure. Show up at 9. Follow the procedures. Complete the tasks. Get paid on Friday. Predictable. Comfortable. Safe. Trading has 0 structure. You can trade or not trade. Enter here or there. Hold for seconds or months. Risk a little or a lot. Every single decision is yours. Every outcome is uncertain. Your brain hates this. It craves certainty like oxygen. So what does it do? It tries to create certainty where none exists. You add more indicators, convincing yourself that if you just find the right combination, you'll know what happens next. You study more patterns, believing that enough analysis will eliminate the unknown. You search for the Holy Grail, the perfect system that never loses. This is why trading feels impossible. You're trying to create certainty in an environment built on uncertainty. It's like trying to grab smoke. The harder you squeeze, the less you hold. The 5% who find it obvious? They've accepted something that sounds simple but feels impossible. You cannot predict what happens next. You don't need to. You only need to execute your edge over and over, knowing that sometimes you'll win and sometimes you'll lose, and that's not just okay, it's required. David couldn't accept this. He needed to know. Sarah embraced it. She didn't need to know. She just needed to execute. Second, the instant feedback loop. In most professions, feedback is delayed. You work on a project for months before seeing results. You invest years in education before earning a degree. The gap between action and outcome gives you emotional distance. In trading, feedback is instant and brutal. You click buy. 5 seconds later, you're losing money. Your heart rate spikes. Your palms sweat. The lizard part of your brain starts screaming that you're in danger. This instant feedback loop hijacks your decision-making. Every tick against you feels personal. Every small loss triggers survival instincts designed for actual physical threats, not financial fluctuations. You start making emotional decisions disguised as logical ones. I'll just move my stop a little wider. The analysis is still valid. That's not logic. That's your brain trying to avoid the pain of being wrong right now. The 95% trade in this emotional state constantly. The 5% have trained themselves to view each trade as meaningless noise. One trade doesn't matter. 10 trades don't matter. What matters is executing the process correctly over hundreds of trades. They've created emotional distance from instant feedback, not by being emotionless, but by understanding that short-term results are random and long-term results are everything. Third, the complexity addiction. Here's something nobody tells you. Your brain is actively sabotaging your trading success by making you crave complexity. Why? Because complexity feels like progress. Learning a new indicator feels productive. Reading another trading book feels like you're getting better. Watching analysis videos feels like you're preparing, but none of that is trading. That's consumption disguised as preparation. The market rewards execution, not education. It rewards boring repetition, not exciting exploration. It rewards doing the same simple thing over and over, which your brain interprets as stagnation. So you keep adding. Another strategy, another indicator, another market to watch, another signal service to follow. Your trading gets more complex, not because it makes you more profitable, but because complexity satisfies your brain's need to feel like you're doing something. David fell into this trap completely. Every time he lost, he thought, I need more information. So he added another indicator, another data feed, another analysis tool. He was addicted to complexity, and it destroyed him. Sarah did the opposite. Every time she thought about adding something, she asked, will this make my execution clearer or more complicated? If it added complexity, she rejected it. Her edge was simple by design, not by accident. The 5% understand something the 95% never learn. Simplicity is not a weakness to overcome. It's a strength to embrace. Fourth, the outcome obsession. You check your account balance 14 times a day. You calculate how much you're up or down this week. You measure yourself by today's profit and loss. You feel like a genius when you're winning and a failure when you're losing. This is outcome obsession, and it's killing you. Because here's the truth. You control nothing about outcomes. You don't control whether the market moves up or down. You don't control whether your perfectly valid setup works this time or doesn't. You don't control whether today, this week, or this month is profitable. You control exactly one thing: whether you followed your rules. The 95% measure success by money made today. The 5% measure success by rules followed today. This single shift changes everything. Imagine two traders. Both take the same trade. Both get stopped out for a loss. Trader 1 feels terrible. Another loss. Another day of being wrong. Another hit to his confidence. He's measuring himself by the outcome which he couldn't control. Trader 2 feels fine, maybe even satisfied. He saw his setup, executed his plan, managed his risk properly, and accepted the result. He's measuring himself by the process which he completely controlled. Same trade, same outcome. Completely different psychological impact. David obsessed over every dollar. Red days destroyed his confidence. Green days inflated his ego. His emotional state was entirely dependent on outcomes he couldn't control. Sarah barely looked at her P&L during the trading day. She had a checklist. Did I follow my entry rules? Did I size properly? Did I exit where I planned? If the answer was yes, she marked the day as successful, regardless of profit or loss. Over time, this process focus created consistency, and consistency created profits. Fifth, the information overload. You're subscribed to 7 trading newsletters. You follow 20 trading accounts on Twitter. You watch analysis videos every morning. You check financial news constantly. You're consuming information all day, every day. And it's making you worse. Because here's what nobody tells you about information and trading. Past a certain point, more information doesn't improve decisions. It paralyzes them. Every piece of information is someone's opinion. Every analysis is one interpretation. Every news headline is one angle. When you consume all of it, you're not getting clarity. You're getting noise. Your brain tries to synthesize all these conflicting inputs. One analyst says buy, another says sell. Economic data is mixed. Sentiment is uncertain. You freeze. Analysis paralysis sets in. You miss the trade entirely or take it with no conviction, exiting at the first sign of trouble. The 5% practice what I call strategic ignorance. They deliberately limit information. They have their system. They know what they're looking for. Everything else is noise they actively ignore. Sarah didn't watch financial news, didn't read analyst reports, didn't check social media during trading hours. She had her 3 rules. When her setup appeared, she executed. When it didn't, she waited. Information couldn't confuse her because she didn't consume it. David consumed everything. Every morning, he'd spend hours reading, watching, analyzing. By the time the market opened, his head was full of conflicting information. He'd second-guess every decision, constantly wondering if he was missing something important. He was missing something important. The fact that less information with clear execution beats more information with paralyzed execution every single time. So here's where we are. You now understand why trading feels impossible. Uncertainty, instant feedback, complexity addiction, outcome obsession, and information overload. These 5 forces make trading feel harder than any other profession. But here's the shift. The 5% who find it obvious aren't immune to these forces. They feel them too. The difference is they've stopped fighting them. Let me show you how. The shift. From impossible to obvious. The transformation isn't about learning more. It's about unlearning almost everything. Shift 1. Embrace uncertainty as your edge. Stop trying to predict. Start trying to react. The market will do what it does. Your job isn't to know what's next. Your job is to execute your plan when your setup appears. The professionals don't say, this will go up. They say, this setup has a favorable probability based on my testing. I'll take the bet knowing I might lose. That subtle language shift reveals a massive psychological shift, from prediction to probability, from certainty to acceptance. When you truly accept that you cannot and do not need to know what happens next, trading gets easier instantly, because you stop wasting mental energy trying to control the uncontrollable. Shift 2. Measure process, not outcomes. Create a new definition of a successful trading day. Not, did I make money? But did I execute my plan? Keep a simple checklist. Did I wait for my setup? Did I size correctly? Did I manage the trade according to my rules? Did I exit where I planned? If you can answer yes to these questions, mark the day as successful, even if you lost money, because you controlled what was controllable. And if you keep doing that, the money takes care of itself. This removes the emotional roller coaster. You're no longer at the mercy of random market fluctuations. You're grounded in process, which is stable, repeatable, and under your control. Shift 3. Simplify ruthlessly. Take everything on your charts right now and remove 90% of it. If that feels scary, that's proof you need to do it. One strategy. Mastered. Not 10 strategies dabbled. One time frame. One market, or a small handful at most. Simple entry rules, simple exit rules, simple risk management. Complexity is not sophistication, it's confusion with a fancy outfit. The most profitable traders I know have the simplest systems, not because they can't handle complexity, but because they've learned that simplicity is what you can actually execute under pressure. Shift 4. Practice strategic ignorance. Limit your information intake deliberately. You don't need to know everything. You need to know your setup and when it appears. Stop checking news during trading hours. Stop reading others' analysis. Stop consuming opinions. Your edge is in your system, not in reacting to everyone else's thoughts. This feels wrong at first, like you're missing something. You're not. You're gaining focus. And focus is far more valuable than information. Shift 5. Develop patience as a strategy. The 5% spend most of their time doing nothing, watching, waiting. They're not bored. They're hunting. And when the right opportunity appears, they strike with full conviction. The EN 95% are always doing something, overtrading, forcing setups, creating opportunities that don't exist because sitting still feels like you're not working. But in trading, doing nothing is often the most profitable action. Patience isn't passive, it's active discipline. It's the willingness to wait for your edge instead of manufacturing trades to feel productive. Let me show you what this looks like in practice. Michael was a day trader, used to take 20 to 30 trades per day, constant action, constant stress. Monthly results? Slightly negative to barely break even. Then he made a radical change. He limited himself to 3 trades per day maximum. If his setup didn't appear, he took 0 trades. Some days he'd sit for 8 hours and do nothing. His brain hated this. It felt like he was wasting time. But here's what happened. His win rate jumped from 42% to 61%. His average winner got bigger because he was only taking the best setups. His monthly results went from break-even to consistently positive. Same markets. Same strategy. The only difference? He stopped forcing trades and started waiting for obvious opportunities. This is what the 5% understand. Trading isn't about being busy, it's about being selective. The market will always offer another opportunity. Your capital and mental energy are finite. Preserve them for the moments that matter. The identity shift. Here's the deepest level. The 5% don't see themselves as profit chasers. They see themselves as rule executors. Their identity isn't tied to wins or losses. It's tied to discipline. This makes them psychologically bulletproof. A bad day doesn't shake them because they didn't fail at their identity. They executed their rules. The market just didn't cooperate this time. That's fine. It will tomorrow, or next week, or next month. A great day doesn't inflate them because they know it's not genius. It's the natural result of executing their edge. Tomorrow, they'll do the same thing regardless of today's outcome. This identity shift is subtle, but everything. When you stop being a trader who chases money and become a trader who executes rules, the money follows naturally. Because you're no longer operating from desperation or greed, you're operating from discipline and patience. The boring truth. Here's what the 5% will never tell you in a dramatic YouTube video. Trading is boring. Really, really boring. You wait. You watch. You execute when your setup appears. You manage the trade. You exit. You wait again. Hours of nothing interrupted by moments of focused execution. The 95% can't handle this. They need excitement. They need action. They need the dopamine hit of constant trading. The 5% have made peace with boredom. They understand that boredom is the price of consistency, and consistency is the price of wealth. If you're finding trading exciting, you're probably overtrading. If it feels like a roller coaster, you're probably trading emotionally. If every day is dramatic, you're probably not following a system. The path to making trading obvious is making it boring, systematic, repeatable, predictable in execution, even when outcomes vary. The final truth. Trading is only impossible when you fight what it actually is. When you try to make it something it's not. When you demand certainty from uncertainty, complexity from simplicity, and excitement from patience. The 5% find it obvious because they've stopped fighting. They've accepted the game for what it is, a probability-based exercise in self-discipline where the edge comes not from knowing more, but from executing better. David never made this shift. Last I heard, he gave up trading entirely, went back to software engineering, blamed the algorithms, the manipulation, the unfair advantages of institutional traders, never once looked at the real problem. He was fighting the wrong war. Sarah, still trading, still executing her 3 rules, still growing her account steadily, boringly, consistently. She doesn't talk about trading much anymore. It's just part of her routine, like brushing her teeth. That's the sign you've made it. When trading stops being a dramatic battle and becomes a boring routine. When you stop asking, how do I predict the market, and start asking, did I follow my rules today? That's when impossible becomes obvious. So here's your choice. You can keep doing what the 95% do, adding more indicators, consuming more information, trading more frequently, making it more complicated, fighting harder. Or you can do what the 5% do. Simplify, focus, execute, wait, repeat. The market doesn't care which path you choose. It will keep offering opportunities regardless. The question is, will you still be in the game when those opportunities appear? Or will you be another statistic in the 95% who found it impossible? The difference between impossible and obvious isn't talent. It's not luck. It's not capital. It's simply whether you're willing to stop fighting and start flowing. Kill the complexity. Kill the need for certainty. Kill the outcome obsession. What's left is trading as it actually is. Obvious.